You need to keep in your mind that these uptrends, downtrends, or the sideways movement are only for you to understand how the retail traders are thinking. Welcome to Ministry of Consistency. In this video, I'm going to talk about all you need for trend lines, how we take profits and stop losses in our trading positions utilizing trend lines, what trend lines work and what trend lines do not work. And finally, we're going to actually understand how you can correlate trend line with smart money concepts to make sure you are properly utilizing market structure. So traders, I'm going to jump straight into this one. This is a very powerful concept. For beginners, let's talk about what are the three types of trends. Number one, uptrends. Number two, downtrends. Number three, sideways trend, or as a lot of you might call it, consolidation. So in an uptrend, as we're going to see,
so in uptrends, we want to look at the overall direction of the markets being bullish, which is, now there are two common things to look at when the market is in an uptrend. These are your higher highs and your higher lows. So when a market is making a high and a low, followed by a higher high and a higher low, meaning this high is over this high and this low is over this low, this is an uptrend or a bullish market trend. This is on the 1 hour. When you go to the 15-minute structure, let's go back to 21st June. We're gonna see that this is actually a very nice uptrend with a lot of higher highs and lows. You see? Beautiful, nice uptrend or bullish momentum. Second type of trend in the markets are your downtrend. It's very simple. It's just the exact opposite of your uptrend. Here what you want to be looking for is highs and lows followed by lower highs and lower lows. So first we're going to draw a simple channel to look at what a downtrend could look like. So this itself is a nice downtrend here. And the key structure to look at here is a high and a low followed by a lower high and a lower low. So this whole structure here is a downtrend where the market is bearish, meaning that the sellers in the markets are stronger, are overpowering the buyers in the markets. The third and final type of market structure is called your sidewards trend or your consolidation. Best example to look at a sidewards trend or a consolidation is this here. This is where your markets are actually setting up buyers and sellers, and both of them have equal pressure or there is lack of liquidity or volume. This is where the markets are having indecision. Here we see that the markets are actually consolidating or moving in sidewards trend. These are very important ranges for future reference videos because these are what we like to call equal highs and lows, which are future price targets.
now let's talk about how we can actually find trade positions inside these uptrends, downtrends, or your sideways trend.
Your retail traders like to draw trend lines utilizing exact price kissing or touching this line. But we don't really like to look at the markets like this.
Hey, so while you're watching about trend lines, I want to tell you a little bit about how we do things inside Ministry of Consistency, where we believe potential profit is not real profit. So we actually have a crash course called a CCPC and a 6-month course where we go in depth one-to-one on building up a highly probable trading system for you, go over all the challenges you might be facing for psychology, and finally, make sure you're set up with a plan to be able to take a small account as much as $5,000 to $10,000 to over multiple 6 figures over 2 to 3 years. We go over all the necessary trading habits required to become consistently profitable in terms of trading. DM us or comment below CCPC more or ACP more to get more details about how you could join the program. Moreover, we got a private signal channel. If you comment below, we will provide you free access to that private signal channel. And by the way, we just did consistent 30% for the past 3 months.
We like to look at it in terms of structure. An uptrend, you look for the markets to set up buy positions or to hold buy positions you have already entered. Contrary, drawing a downtrend in terms of retail perspective is making sure all the points are touching You want to see it slowly keep coming downwards, and you look for selling positions in a downtrend. Or if you're already inside a sell, you wait for the market to take your positions into more and more profit, so you hold your selling positions while the downtrend continues. Again, we don't really like to trade with trend lines, but it's important to understand how retail traders draw their trend lines so you can understand the difference between perfectly drawn trend lines and effective market structure. In terms of consolidation positions, you don't really have to draw trend lines. What you're usually going to see in consolidation positions are your sideways movement. This we like to call liquidity because indecision breeds a lot of orders on both sides. So we like to draw arrows here. You could use a box, you could use straight lines. So I'm just going to use arrows here, and this itself is your consolidation or your sideways movement position.
As you've seen from the 3 types of market trends and how structure could set up, I want you to pause this video, go to your trading view, and look out for some positions, both for uptrends, downtrends, and for your sideways movement called your consolidation or sideways trend. While you do this, you need to keep in your mind that these uptrends, downtrends, or the sideways movement are only for you to understand how the retail traders are thinking or to understand the power inside the markets. Are the buyers overpowering the sellers, causing an uptrend? Or are the sellers overpowering the buyers, causing a downtrend? Or finally, are both the buyers and sellers having an indecision position, setting up future market movement or future market direction, causing consolidation or your sideways trend? So in terms of understanding trend, you need to understand there are only 2 positions inside these trends where we like to execute positions. Number 1 is after a consolidation or a sideways trend has happened, or while the 75% of the consolidation has happened, you start to look for trade entries, or inside an uptrend or a downtrend, which we like to call a trending market, you only look for trade positions at a retracement.
If we look at here, we want to look at trade positions within these areas. In an uptrend, the retracement positions, where the market comes back to make some retracement is where we look for entries. On a downtrend here, it's setting up really nice. These are the positions we look for trade entries. These are your retracement positions. Like I said, in uptrends and downtrends, we look for trade entries inside the retracement. For consolidation, we look for entries after 75% of the consolidation. As we see here, 75% of the consolidation is over. We look for trade entries within these areas because that is where the markets decide to take out liquidity and cause a change in momentum. Alright?
As you have understood what the 3 different types of trends are in the market, I want to talk a little bit about what the perfect trade entry inside trend lines are. First of all, you need to understand in trading, only one confirmation will never give you a perfect entry. And secondly, there is nothing called a perfect entry. What we want to replace a perfect entry with a highly probable entry. So here, trend lines are not the most highly probable confirmations, but they are a good confirmation for you to know what the market or what the demand and supply inside the market is trying to do. So what I want you guys to do is stay tuned with us, subscribe to this channel, and wait for the series to continue as we upload our more higher probable confirmations like Fibonacci, your perfect optimum trade entry, your break and make of market structure in the smaller time frames, and finally finding out how to set up your own 3 to 4 trading execution system. Thank you very much for watching. This is all you need to know about trend lines, and see you guys on the next video.